Can you refinance a mortgage with a tax lien? Welcome back. In this episode, I'm going to answer your question. Can you refinance a mortgage with a tax lien? Now, my name is Ted Thomas. I've been involved in tax liens for about 30 years. I got involved with tax liens and tax deeds as an investor. Then over the 30 years, I became a guide. I answered a lot more questions. Then I became a coach, and then I became a mentor. And I've taught thousands of students how to buy tax lien certificates and how to buy tax defaulted product. Now, this is a very ethical and honorable business. It's quite lucrative, but it's very little known. You help yourself, you help the county, and you help the homeowner when you get involved in this. So what is the question we're working on today? Well, I'm going to answer the question, can you refinance a mortgage with a tax lien certificate? So the answer to that question is yes, and then maybe it's no. So let's learn both answers as we go through this video. You'll find the answer to the question, can you refinance a mortgage with a tax lien certificate? All right, now I've specialized this in a long time, so I've seen a lot of people do a lot of different things. Now, many people have mortgage problems. Many people have money problems. So if you're trying to refinance and get out of your problem by refinancing, in other words, you're going to take on more debt, you need to reconsider that. You don't want to keep taking on more debt. You might be better off thinking about reducing your lifestyle. Now, I know that television, the newspapers, all of the media for that matter, is constantly giving you commercials on why you should borrow and take on more debt. Well, if you're taking on debt and it's for anything but investments, you need to think about that because it's suddenly going to come down on top of you if you keep taking on more debt. So there's lots of people showing you and telling you that you should borrow more money. I would say you probably should consider reducing your lifestyle. Folks, I'm not a preacher of doom. I know what it's like not to not have money, but let's think this out. All right, this episode, I'm trying to answer the question, can you refinance a mortgage with a tax lien? Folks, if you've got a tax lien on that property, you already have a major problem. So it's probably wise, as I said, to think about shrinking your lifestyle so that you can get out of debt. Don't take on more debt. However, if you're going to take on more debt, then you're going to have to go look at another lender. Now, I tell people it's always a good idea to grow financially by borrowing some money so you could grow towards a big investment. All right, but if you haven't got your other investments in order and you've got a tax lien, now is not the time. So property tax, which is a tax lien, that debt never goes away. So if you own this property now, that debt is just going to get bigger. All right, so the debt never goes away. When you pay it, instantaneously, they're going to put that debt right back on the property. So you don't want to have a tax lien on your property. Now, if you do, the county treasurer now can take control of that property. So that's what the county treasurer does with tax lien certificates. So here's the question you need to be answered. Let's look at it together. Are you ready income-wise to handle more debt? Okay? Or should you be cutting and thinking about reducing your burdens? You need to think about that. Delaying paying off those debt, it'll only get worse. So give that a lot of thought. So what are we talking about today? Can you refinance a mortgage with a tax lien? All right, I'm going to tell you, in most cases, you shouldn't even dream about it. Why shouldn't you dream about it? Well, I'm a prepared investor. And as a prepared investor, what I do is I plan what I'm going to do with my money. You need to do the same thing. So I'm not an attorney. I'm not a CPA. I'm not a financial planner. But I can tell you, if you're watching and listening to me on this video and you have a tax lien certificate, you are in trouble. Now, you might not think you're in trouble, but you are in trouble. And I'm going to tell you why right now. All right, you're in big trouble with the bank because the bank that funded your loan, okay, when you signed a loan, you signed a mortgage or a deed of trust. Now the bank's money is in jeopardy. Why is the bank's money in jeopardy? Because you have a tax lien, and a tax lien is in front of a mortgage. In other words, it's a priority lien before the mortgage. So that means whoever owns the tax lien could wipe out the mortgage. So let's talk about these mortgages. All right, the eastern part of the United States, almost all loans are mortgages. However, the South and most of the West, they're using a deed of trust. Okay, within those documents, they have clauses. And the clauses sometimes have covenants. Now, what's a covenant? Covenant is nothing more than a promise. So the promise that you make when you sign that mortgage or that deed of trust is three different things. Promise number one, you promise you'll pay. Promise number two, you promise you'll pay your taxes and keep them current. Promise number three, you'll pay your casualty insurance, in other words, the fire insurance. All right, now, if you haven't paid your tax lien, you're now in default of that loan. Let me say that again. You're in default in the loan, and the lender can now start a foreclosure process immediately. So if the lender finds out you've got a tax lien, they can start a foreclosure process to take the property away from you, even if your payments have been made, even if your insurance is paid. If you have not paid your taxes, you are in default of the covenants on that loan. Now, don't kid yourself for a second. They will do that if the taxes aren't paid, because the mortgage is the second lien on the property. Now, every mortgage and every deed of trust will have those three covenants. Covenant number one, that you will pay taxes and keep them current. Covenant number two, you will pay the insurance. Covenant number three, you pay taxes, mortgage, and insurance. If you haven't paid those, they can do something about it. So you don't want to be in that situation. So what's my point here? Anytime a foreclosure notice is issued, you're going to have an even bigger problem. So you have a problem with a tax lien first. Now you're going to have a foreclosure problem if the bank finds out about it. Okay, so today's episode, I'm answering the question, can you refinance a mortgage with a tax lien? All right, now folks, if you have improved your income significantly, if you have improved it, you haven't taken on any more debt, and you truly can afford some higher payments, well then you probably should start shopping for another lender. And the other lender may well lend you enough money to not only pay off the tax lien, but to give you some extra money. All right, you're taking on more debt. You don't want to take on more debt unless you've got more income and it's significant and you know that you can afford to pay more. Okay, this is a serious problem. Now, people refinance things all the time, but it's because the earnings went up and they didn't acquire any more payments. So to try to get yourself out of debt by refinancing is not the best thing. So you can shop with other lenders. The other lenders will say, well, you'll have to pay points, you'll have to pay extra fees, things like that, because the other lender wants to lend, but they want to make money, and they make their money with points and fees, and that's just the name of the game for them. So you need to understand, if you already have a tax lien certificate and you're trying to refinance, what all you're doing is you're letting the lender know that you're in default. And because you're in default on the clauses which I said were covenants in the loan. So give that a lot of thought. So I don't suggest you take on more debt unless your income is taken off and you're doing a lot more, you're getting a lot more income. All right, now there's other videos in this channel that will talk about foreclosure, and there's other videos in the channel that will talk about doing refinancing. So you can do both of those, but I'm going to say be very careful if you're trying to refinance a mortgage and you have a tax lien, because you're going to let that lender know that you got a tax lien. And when they find out, you're in now violation of the mortgage or the deed of trust. Okay, so I'm going to continue, but I'm going to do two more questions right now. When I purchase a tax lien certificate, who do I pay? Well, that's an easy question. When you purchase the tax certificate, you're going to invest with the government, and you'll ultimately get a check back from the government. You don't invest with me, you invest with the government, check back from them, and that's why it's predictable, it's certain, and it's secure. Who will pay the return? But I think I just answered that. You get your return on a tax certificate from the government because the people have to pay the government. You can't collect taxes. So when the people come in to pay their tax, they'll pay the tax, then the treasurer or someone in the treasurer's office will call you, and they'll call you, or they'll send you an email or send you a text or something. They'll say, the people have paid their tax, send the tax lien back to the office, and we'll send you a check for all of your investment plus whatever the high interest rate is. All right, so I'm finishing up now, and here's what I want to make sure. I always promise people, I'll tell you about two mistakes people make at the auction. First mistake they make at the auction is this: they don't look at the property. So if you haven't had eyes and boots on the ground and you haven't seen that property, or you don't have somebody you know looking at that property, I'm going to tell you not to buy it. What if it burned down? What if there was a hurricane? What if there was a fire? What if there was a windstorm? I mean, any kind of crisis could happen to that property. And then you'll be buying that burned out Hulk. You really don't want to do that. The other big mistake people make is they get to the auction and they get too excited. And they get excited and they get into that bidding stuff and they start bidding and they're bidding to win. You don't need a bid to win. Anybody can bid high and win. You bid so you get to your objective of getting a property cheap. All right, now you don't want to bid on a property until you know what you can sell it for. All right, now that's called an exit strategy. If you don't have an exit strategy, don't bid on the property. All right, well, thanks for watching. Below me is a free gift for all of you that stayed with me. I hope you learned a lot today. I'll be back on the next video.